Test 1 2 3. I think we're live and looking good. Things are recording. We got 3 minutes to the market open. Good morning, traders. This is day 12 of the first payout challenge. I'm feeling pretty good this morning. How about you? So bias is kind of mixed today. With some of the higher time, like the daily chart, I'm seeing a little more bearishly. Medium time frames, I'm kind of neutral, a little bullish on the 1 hour-ish. So we'll take a look at that stuff. Most notably is pre-930, and I'm seeing how the pre-930 here is accumulating. And once on my stream, make sure it's working. One of these where it didn't record, which is a bummer. This is, me documenting my journey, my progress through this challenge, and so I want to have all of these recorded. But anyways, pre-930. So here's 930 open in 2 minutes. There's this accumulation ring forming, which is exactly what I want to see before 930. I want to see price just slow down, start generating liquidity on the buy side and on the sell side. And currently, so what I'll look for at 930 is I'll look for one side of this to get purged. Whether it is like this arrow right here and we purge to the buy side, or if it's this arrow here, purge down to the sell side, kind of help give an indication in terms of bias. Good morning, Chris, my brother. How are you, my friend? Thanks for joining, dude. So we got 2 minutes here till open, and yeah, let's look around and see what we see in the next couple minutes. So this is where on the daily chart, tapped into the gold bar high in the extension even, and pushing a little bit above it. They can start flip-flopping right in there. We have this volume imbalance and this fair value gap down here that have been unmitigated. So, it's bullish until proven otherwise. But it's where this is kind of starting to make me feel like, all right, we've closed a second candle. Here's a third candle. How many more candles until we start coming down into here? Obviously, we don't want to step in front of a freight train, but hey, sometimes you do. So this only just kind of makes me feel a little more mixed. I'm not one to be shorting all-time highs, but it just plays into the thesis a little bit. We've already taken the previous week's high. That's also kind of making me slightly bearish. It's like, oh, is this going to take the high and then dump down and take out some of the sell side? But again, I'm going to be bullish above this new week opening gap. I'm going to be bullish above Sunday 12 a.m. open, and just anticipate what's going on now. This whole leg is just a rebalancing and a retracement. All right, 930 open. Let's go back to this screen. All right, so we took liquidity here on the buy side. It's forming a little bit of an inversion. Oh, this is looking like one of those. Okay, this is either looking like seek and destroy, or it's going to rip for sell side down here. I just don't like the model when it forms within these two candles here. And it's my model. It's an inversion and breaker. Now it's taking sell side. I don't like that. For me, I would want to see it close closer to the candles here. Buy side, sell side's taken. We have an SMT on both sides. Regular trading hour gap has been balanced. So yeah. You take any trades yet this morning, Chris? All right. So 930 is just pushing lower. 130 tick candle. Here's my inversion that I was kind of looking at. I was eyeballing this. Becomes a breaker for sell side delivery, which if I look at my 1 hour chart is what I was anticipating. Here's a similar situation to yesterday, where it just makes this massive breaker, and it's my model. And look at that, same thing as yesterday. 930 candle close, could have entered on a market buy and delivered to sell side. Equal lows right here. So this zone in here is the 1 hour fair value gap. I'm actually looking more for a long down in there. Oh, sweet, dude. Gotta love it when you're in and out before market open, man. You can continue on with your day. Um, Looking back at the price action, yeah, like maybe there was a 2-minute order block down in here or in here somewhere. I opened the charts in here and nothing to do till open for me. Oh, look at that. So that's an aggressive drop. That kind of changes the narrative to some extent. Look at just an aggressive delivery, just like yesterday. Could have just marketed in on the close of the 9:30 candle. Boom, I'd have been done. What's interesting is I find in my back testing, there's periods of time where you can do that, and then periods of time where you can't. And the market moves in those kind of cycles, I've noticed. Kind of like sometimes the cycle is you can play both longs and short and win, right? And then sometimes the cycle is you have to be on sides, otherwise you're going to get wrecked. The short models will present and you'll be off sides, and then you'll just get stomped on. And I feel like I'm starting to notice that a whole lot more. But when it happens, it's like I don't adapt that quickly. And like the last couple of weeks, the whole 9:30 was just trash. Pre-market was great. 9:30 was trash. So here's a fair value gap. First presented fair value gap. Pushing a little lower than I'd like to see. But you know, the 9:30 was just trash. It was seek and destroy or sideways, and then lunch and PM was clean, or pre-market was super clean. So rejected off of this SIBI with a bearish SMT. I was kind of thinking it might take this high and then push back down into here. Instead, the narrative was it pushed down into this fair value gap, and it's balancing this out. Maybe there's a volume imbalance down there. Maybe like a one, yeah, there's like a 1-tick volume imbalance. So as long as that holds, I'm good with being bullish. However, so even looking at this long here, that's a 116 tick stop. That's huge. Huge. 1 mic equal 58 in risk per mic. So come out just a little bit. Curious to see. Now we have a bullish SMT down in here. We don't have any 5-minute closures. We have a 1-minute closure. And see what ES and YM are doing. Generally something differently, right? YM is often La La Land. And look at that. So we got right there, bullish SMT. YM's doing its own thing. It's taken the buy side on YM, which is what I'm expecting. I feel like YM tends to lead the charge lately. One of the other differences. So I mean, if it closes above that, I guess I'm in. That's one version of my model. I'm over here on this chart. 3 seconds until this candle closes. We're 9:35, so we got 5 minutes left in this macro. Whew. Need more coffee. Woke up a little late today. This rejection block right there. So we have 2 first presented fair value gaps. I'm dancing around midnight open. I can take that off. So this breaker, I got to note that. Study 30 model. want to go back and look and see. I've been documenting when the model forms at 9:20, when the model forms at 9:30, and also when it just stomps on you. And wanting to be more confident in taking that 9:30 candle, because for quite a while, that 9:30 candle, when you took it, just wiped you out. So let's see what else we got going on. Kind of just waiting. Price is sitting here, consolidating, chopping. Look how let's zoom out just a little bit. Wanting to see here on the 5 and the 15. So this accumulation phase, the buy side was taken. Look at that, the equal highs that I had marked out, taken. I was bullish above the new day opening gap right there. I was thinking London low of the day, New York AM continuation. This is quite a rebalance. My target is not relevant right now. So the 2 a.m. 4-hour candle. That took buy side on the 10 p.m. candle. This is the 6 a.m. candle with this fair value gap. So the question is, now that this 6 a.m. candle is taken buy side up here at the stop hunt for a further retracement down into this rejection block and be finishing out balancing this, or is this the low and this candle rips up for the continuation of internal to external liquidity? Kind of what I'm thinking. I feel like within the 4-hour, volume imbalance was tapped into. This fair value gap was tapped into. This volume imbalance was already balanced. Nice rejection off of it. Does it have reason to go lower? Question. So coming back over here on the 1-minute chart, I guess it still stands that I am slightly more bullish than bearish. So there it is. 1 minute left in this macro. Candle closing above, and I'll go in even a minute or so after. And that's where I get a little tripped up personally with my rules, because they're adaptable. Like the other day I was watching a Zusi video and I was reminded that Zusi uses 5 after for his macros, or well, 15 after for his macros, 7:45 to 8:15, for example, which is a little different than most everybody else. And so I was like, oh, well, if Zusi uses those macros, maybe I should too. So I don't know. That's why I took one of my trades. I think it was yesterday's trade. I took it more in a Zusi macro, and then I pushed it by a minute because I can always give myself some flexibility. Then I felt like I broke my rules and I had to collapse a trade, go break even on a good trade. The moment, not looking like it's closing above. And if anything, I wonder if I feel like macros are maybe the least important of the rules. Like they're a good guideline, but, and I know Hydra's really specific with the macros. Like if it's a minute out, he won't do it. What does the data say? I don't have data on that. Gosh. Or I might have data. I document all of my trades, and I note if they're in the macro, but I also haven't taken, I guess now that I think about it, good question, Chris, I haven't taken many outside of macro. Like I really try not to do that because it's the rule. But I also know, like Ryan, it has less to, like Hydra uses the rules to keep himself in check. Oh, now we're going for more sell side. So the delivery is going to be bearish. And for me, there was no continuation model in there. So I guess right now it's just wait for a little more info. We're in a discount. Anyway, so what I was saying was that Hydra, like for example, uses the rules to keep himself in check. Like it was just for an emotional reason, follow his rules, binary yes or no kind of thing. And then you get people like Ryan, and they're just otherworldly, where the rules are ambiguous to some extent. but Ryan is killing it. Start writing on the chart the time you enter. I also wait for the macro, but if it's like 48 and my model shows, I'll front run, but I do prefer the macro. Yeah, like what I've done so far is I've given myself 1 minute. And I say if it closes a minute outside, like 41 after, I've been good with that. Because I'd noticed a lot of the times a candle might close 1 minute before or 1 minute after. And then similarly to the break-even thing we were talking about, causes more problems where you missed your model because of 1 minute in macro, and then you start chasing price. But extending it 5 minutes out like Zusi, yeah, I haven't tested that. But I feel like if any of the things, the macros seem to be the least important, because like I see, Zusi talks about, and even ICT alludes to, the time is the most important part, but the time, Zusi talks about the time shifting. In the narrative within the time window shift. And I'm looking around here. This 1 hour is looking super bearish. At least at this point, 15 minutes to close. So that would be my model on the 1 hour. SMT stop hunt, inversion, close below. Which that narrative would fit with my higher time frame, or that bias would fit with my higher time frame bias. Then we're seeing this aggressive distribution, which is what we've seen a little bit lately. And looking at those cycles and patterns, I've noticed last few weeks, 930 chopped, and then it distributed. The last couple days, 930 has distributed and then chopped, or at least yesterday, today, and I can't remember Friday. All right, London low, London high was taken. What do we got down here? Got not much down here. Zoom out. I am zoom. So this liquidity down here was taken. Gold new day opening gap. Bullish SMT with London low. ES 744. We have these two gaps here. Here. So this volume imbalance down here. I think is noteworthy. Back down to that new week opening gap. Retesting midnight open at this point. Midnight open at Sunday. So, looking at the daily chart, previous day high and low have not been taken. On the 729 gold block, we tapped into the extension, typically where we would see a rejection. Looking here at our medium time frame, so the 4 hour, the way the 4 hours printing right now with 13 minutes to close, that candle changed like 30 minutes. It was looking like it was going to be a nice bullish closer, as if this 4 hour 2 a.m. candle was the stop hunt. Nope. I think this is the stop hunt for distribution lower. In my eye, there's no reason to go lower other than more bearish delivery. So maybe our weekly profile is going to be a bearish delivery, like Tuesday high of the week kind of thing, where this was the high, or well, I guess it would have been Monday high of the week because that was yesterday. Looking through this here, I don't have any way to get in any of this. Maybe you drop down to the lower time frame. So here is there was a possible entry, outside of macro, but an invert stop hunt inversion. 15-second is not part of my rules though. So 20 seconds to close on this candle, 3 minutes till the next macro. What we got really is level right here. Market for now. It's going to be hard for me to want to do much of anything unless that's swept. 1 hour volume imbalance down here. This chart, this liquidity right here, this candle, this specific candle, it was a 9 a.m. low. All right, so there's a fair value gap formed, 2 fair value gaps. Coming down to previous day low and equilibrium of the Goldbach range. But trading is 90% sitting on your hands. Right? Is that right? I feel like I've been doing a lot of waiting lately. So I'm going to read this to myself to remind myself. Because last week felt really slow. I think there were several days where I didn't take a trade. Gosh, yesterday, 1 trade. But it says here, I want the pain of discipline, not the pain of regret. So here's the pain of discipline. Sitting on your hands, waiting for something to show itself, waiting for price to show you what it wants to do. All right, so we've taken major liquidity to the sell side. Not exactly bullish at this moment, but I could take a long if it presents itself after that kind of liquidity being taken. I updated my rules. I added this up there. I changed it to be more clear, right? No break even at all. So if I press the button, I press the button. Maybe zoom out some. I've got to get my coffee in me. That's the only bummer. I mean, I'm not West Coast time, Mountain time, but it's still 2 hours earlier than East Coast time. And East Coasters have the advantage. You know, for me to get up, like even to play like some of the earlier pre-market stuff, it's like if I wanted to play in the 8 a.m. zone, 8 a.m. New York time zone, that means I got to be ready for the charts at 6 a.m. my time, which means I got to get up and there's an hour, call me a prissy pants or whatever, but I have an hour or so of things that I need to do before I even hit the charts, like pray and meditate and journal. Ideally get some movement in. I didn't today because we were up late last night. So I pretty much I skipped everything, my morning routine, woke up and opened up the charts. I do feel like I do better on the days where I get my morning routine. So then, just driving for further sell side, which, I mean, totally makes sense, right? There is so much liquidity below us, so much many buy stops. So the 4-hour chart blasted through this rejection block, pushing way down in this imbalance, tapping into this fair value gap here. Sometimes what happens when the 4-hour comes back to rebalance a 10 a.m. fair value gap, and this is a little deep, sometimes it'll just like gently tap into that 4-hour fair value gap, rip for external liquidity, and then come back down for a deeper dig. So maybe is this just digging down to balance this out? Maybe. Is there a reversal possible down in here? Or is it just going to blast through? $7.52. So back in the macro. There a volume imbalance there? Maybe like a 1 tick. Yeah, look at that right there. So, yep, technically extends down into here. All right, that 4-hour low is swept. Previous day low is taken. Equal highs right there. That relative equal highs, relative equal highs, relative equal highs. I don't think this is the Judas. To me, that little tiny thing was the Judas. This is the distribution. So in terms of a daily profile, you know, I'm anticipating some form of a 10 a.m. lunch-ish reversal to come take out some of this liquidity and do be a continuation if it's bearish on the day. See. Look at that drop. 800, 900 ticks. I wonder who got in on that. I'm curious if like Hydra took this short. I know he got wiped yesterday taking a short. And then that is just big and ugly. You know, that's not, I mean, it's a breaker, a bunch of breakers, an inversion. It's ugly. Hey, why is that moving? That shouldn't. Lock that, anchor that. All right, what now? What now? Zoom out. Gosh, look at all these imbalances. Beautiful distribution. Like, it's nice to see 930 moving. Because that just wasn't fun for a couple weeks. That's, I guess, right? That's the thing. The market moves in these cycles, and I feel like it's about a 2 or 3 week cycle. Oh, I'm over. Where the market will do something for 2 to 3 weeks, such as 930's choppy, and then it gets you, you know, I mean, the market's designed to take our money, right? So then it gets you used to that rhythm, and then it changes. And so now, different with 930 distributing. All right, is there any reason to consider any long down in here? Is there anything? There's a daily fair value gap. So we tap that daily fair value gap. We're in macro. Here's one inversion. Gosh, there's so many inversions. I can't take them all. 120 ticks if I do the whole thing. Gee, 1 to 1. All right, so now it's so bearish looking on certain time frames, but I don't want to long it. But here on the daily, like that's a daily fair value gap right there. That's a long. So 95 per mic. All right, so there's SMT down at those lows with 15-minute consecutive candle SMT. So this does feel a little bit like catching a falling knife. Although look at YM. YM. It is not correlated. Sure. I'll go in for one. That was my long setup. It was just way further down than I thought it would be. And I might be catching a fallen knife. So we have a tailless candle. So I guess the SMT, that was the one question I did have. I wanted to look at. I should have looked at that a little more before entering. That indicator says we have SMT. But I wanted to double check that. So there is YM. YM, where are you? How are you doing that? So there's a 15-minute consecutive candle SMT, unconfirmed. All right, it's coming from my stop. All right, so this is IFVG. Documenting the trade. Macro. Got to look at the SM. That might not have been confirmed. There. That is. Here's. So yeah, inverted this. Curious to see, we got a new 1 hour candle opening just now. How that candle creates its structure. So no tail on that candle. I got a feeling like it's going to come down for one more push and then possibly do a retracement back up. Probably early, now that I think about it, probably early to consider a reversal trade. All right, out of that one. So now the 10 a.m. candle took the 9 a.m. candle's low. I think in this instance, I would typically combine all those gaps into one fair value gap. I didn't do that, but in part because it was just so huge. So my narrative and bias were half right. I expected the distribution here and then some balancing down into here. However, offsides beyond that. So closing below this 4 hour fair value gap. So we got a new 4 hour candle. So my higher time frame bias was correct. I was expecting a delivery down into here. And now it's going to chop with a 1,000 tick move probably at this point. I'm wondering if it's just going to sit down in here and chop. Let's see here. What else do we got to look at? Yeah, bullish SMT. Yes, YM. Bullish SMT. NQ, YM. But yeah, there was bullish SMT forming. We have another bullish SMT forming, consecutive candle. Now it's just going to do the thing where it just grinds. I almost feel like in part of the pattern recognition that I was talking about earlier, I almost feel like the pattern I'm also noticing is I should probably step away when it just distributes like that, because often just going to chop down in here, right? So even if I'm right in terms of it turning around right in here at this daily fair value gap, it might not want to do it on my time frame, my timeline. So here's to see. This isn't looking that pretty. Zooming out a little bit. All these inefficiencies above the 5-minute fair value gap. This 4-hour candle took that candle's low right there. Zooming out even further. Now this weekly candle has balanced out this efficiency. Like this to me is a good spot. This whole zone for some kind of reaction. All right, so I'm thinking of the power of the three. Here's the 10 a.m. open on this line right here. You know, accumulation, manipulation, distribution. Might be one of those instances where I was right but wrong at the same time. So here's a breaker. Here's an implied inversion. So I do have that to get in on technically. double SMT. One more shot. I could be totally getting into an accumulation. And so, shoot, now that I thought about that, it makes me think, oh, well, if I feel like I'm in an accumulation, I can just go break even. But now I can't. I got to set it and forget it. So yeah, cool about that. So what's a reasonable target? That's 1.3. I have one contract, so we'll see. We'll see. This is a breaker, applied, IFVG, applied for value gap. We have a higher time frame level. We have SMT. We have liquidity taken. What do you think, folks? Chris, am I offsides? So breaker, implied for value gap, higher time frame level, SMT, liquidity taken, power 3. We have high probability targets. So, you know, uh-huh. So are you kind of thinking the same thing, accumulation after that distribution? Yeah, it was a big distribution. So maybe I'll just keep my targets shallow. So this tailless candle here. Yeah, it's it's interesting, Chris. Like you were saying that the other day about like if it's your model presents itself, you take it. And I go through phases where like the market cycles where it's like you can be off sides and right, and it's fine. And then at least in my back testing, in my experience, then there's like these phases where like you're off sides and you're just wrong, even if your model presents. I'm going to count that as an IFVG versus implied fair value gap. I want to note it is maybe not perfect. Probably my on this trade. But I'm anticipating that this is also 10 a.m. accumulation, manipulation, and at least some form of distribution. That's where you have to stick it out knowing the edge and the risk management carries you. Yeah, and that's interesting. It's like oh, that tailless candle was taken, so it'll be from like I'm curious to see what happens at this point with these inefficiencies here. Is that all it wants? It creates a stop hunt, inverts this for more distribution lower, maybe. But gosh, oh, I'm not even on the right chart. But gosh, I'm but it's at a daily fair value gap, so I'm expecting a response down. Will I get it? Totally different question. Stalling out a little bit, but That's okay. It can do that. Zoom out a little bit, see what I think. Yeah, I feel like I'm opposing order flow. I mean, I expect this 15-minute candle to rebalance up into here. It's going to create this fair value gap, obviously. And I guess the question is, can I get my TP or not before it reverses? Trying to think about the daily profile, where what that's going to unfold and look like. Initially, I was thinking London low of the day. Were you bearish or bullish on the day, Chris? Or did you not have a bias because you were already done? But I was thinking, oh, is this London low of the day? Higher time frame level hit, SMTs. Never formed that breaker, unconfirmed, not bullish. We didn't break above, not bullish then. So I didn't get the New York AM continuation model. Now the 1 hour. Yeah, I can't jump from model to model. Yeah, I've done 2 models for me. First was Friends 15-minute Matilda. I guess we talked about this, didn't we, Chris? Yeah. And then the second was the Breaker IFVG and or IFVG. I kind of have 2 variations I'm playing, either a straight inversion with the same criteria, you know, SMT, liquidity grab, same thing as you, SMT, liquidity grab, higher time frame level, all that good stuff, or the breaker inversion. You long this morning at 650. Beautiful, right there. Oh, buddy, and that's nice. Like, look at that. Just get distribution. Boom. Probably got your 2R out of it too. Okay, getting some distribution, getting some reaction. So my rule was no break even. I gave myself a caveat that I don't know if I should have, which is if it's price, you know, if it gets 75% to my TP, I can go break even. What do you think about that one, Chris? London high was your target? UR was midnight open. This tailless candle have all of these gaps. Do you agree with that? The break even is fine when you're almost to your TP. So I don't really have, let's see here. I don't really have an actual target, this tailless candle right there. We have these gaps here, this gap. All right, well, you got the new 15-minute candle. Where's 22222222? So the bottom of this gap would be the 15 consequent encroachment of the 15-minute gap. So you go, yeah, if you hit 1.5R, you go break even, which this is 1.3 to this point. And I don't know, like, you agree with this or not, Chris, but what Hydra would do is like in this instance where he took a loss first, and then he would take another trade. He would close the second trade when he mitigated the losses from the first trade. Is that something you're doing, or are you holding for your 2R to further offset the losses? Got a tailless candling. 23,229, so you're looking at 229. I was at 222. Yeah, similar, same zone, right? Same zone. I was looking at 222. Pretty much the top of that candlestick. But I like this tailless candle right here, at least for now. So rejecting off that 5-minute fair value gap so far. There is this fair value gap down in here too. So we could rebalance down into there or continuing on. %of the range is right above that fair value gap's consequent encroachment, but it's not both of them combined, so it could be, that's conservative target. Now, if you had a bearish bias, this would be a short. Right? For me, at least, tap into a higher time frame level, a 15 5-minute fair value gap. Here could be a stop hunt. Here's an inversion. Here's the stop hunt. Here's the inversion. And then this is the manipulation on the hourly open for the 10 a.m. candle. Given the daily level, the bullish SMT, feel like I should do it. Or I did what I should have done. Any other info? This is where my brain is like analyzing everything again and again and again. And maybe that's partly why I get exhausted trading, is what's done is done. And maybe that's a good thing. Maybe not going break even preserves my mental capital because it's not a choice, right? Like I did it and I have to accept and own that choice. Take responsibility for my actions. And even if I look back in hindsight and go, it wasn't my model, pop out to go break even because maybe then whatever, maybe something was wrong. Maybe I misread SMT. I don't typically take anything that's not my model. This maybe, I guess now that I say that, this is a little bit iffy because it's an inverted inversion, but I can always justify it in my head. I'm like, oh, well, Hydra says that inverted inversions are more high probability than just a regular inversion, right? So that's kind of where like my justification was, but I guess I hadn't fully back tested even inverted inversions. But back to what I was saying is just that I guess that's a good component of maybe self accountability. And by allowing myself to break even on a trade, it allows you to have excuses. Like, oh, well, whoops, that one didn't meet this criteria. That one didn't meet that criteria. And like, I don't know where the balance is. Like, I prefer balance over anything else. And like, because sometimes I feel like you have to enter quickly. You don't get enough time to check it out. And so then a few times, I enter quickly, and then I can check everything out, and maybe exit out of the trade if that isn't looking good. So maybe that's a bad thing to do. Maybe it's you don't enter unless you've dotted all your I's and crossed all of your T's. I like that. So some equal lows and a rejection block. Nice. Coming into previous day low and the Goldbach equilibrium. I don't like that. So far, this inverted fair value gap's holding. Yeah, it's because at the end of the day, you're trying to preserve capital. Run out of money, you can't take a trade. Yeah, I struggle with that because it's kind of like I feel like I often did the 1R thing, or 1-to-1 thing, and that was nice because I won a whole bunch of trades, but it felt really hard to get ahead when you took a few losers because you take 3 or 4 losses in a row, which with a 50% win rate, statistically, it's likely to see 6 losses in a row. 6 losses at a 1-to-1 means you need 6 wins to make that up. But maybe what it is if I'm just talking out loud here to myself because I'm sitting here. Maybe it's if you're mitigating a loss, you do 1-to-1 to make that loss up, and then beyond that, you do the 2-to-1 get ahead. I know Hydra's more like 1.5-to-1. He TPs early, he TPs at the swing, which is typically not even sometimes not even 1R, sometimes it's a little bit above, and then he TPs again at 2R, so his trades are like 1.5. Yeah, all things to journal for sure. All right, so this tailless candle was mitigated. Which, can still come down into the discount here. I really don't want to see it spend very much time below the hourly open. And then I'm just offsides if that's, which is totally possible. Totally possible to be offsides. $8.20, sorry, $10.20. Dancing around my entry. Anything else I want to take into account here? Yeah, I think this 5-minute fair value gap is going to help tell the story. What's going on with ES and YM? All right, so YM. Yeah, that's a confirmed 5-minute bearish SMT. Coming down into that 5-minute fair value gap. Got my quarter, my quarter to flip. So these trades are just a coin toss. I have no clue of the outcome. None. I have a desire for the outcome. That's part of the problem, right? Every trader wants to win. What does Hydra say? I'm ready to lose. I like that. I liked when he was saying that. I'm ready to lose. So yeah, I'm kind of neutral, I guess, at this point. That was a nice response with this candle here, the 1005. Gave a nice response there. Respected the consequent encroachment of that 5-minute fair value gap, that SIBI. All right, we were on a No News Tuesday. I forgot that it was No News Tuesday. So that's interesting. That to me, so that 9:30 might have been the distribution, and now then the rest of the session just chops because of no other volatility, market drivers. See what's going on the lower time frame. All right, they're supposed to pull my batteries out of my mouse, aren't I, Chris? It doesn't have batteries. I guess I can turn it off. All right, so that's a nice distribution. Is this just a stop hunt, though? Got some relative equal lows down here. I was looking for an SMT. Let's see. I don't think there's a bullish SMT down there too, yeah. I guess I don't have a rule for trailing my stop. Now, if I'm not, if I'm getting specifics with that, you think about that. Because like here's a significant swing, right? So probabilities are this swing point should hold, and if I'm wrong, not saying it still can't come down, tap this swing and push that up. I do know that this like down in here is too much, so I can tuck my stop up below 3 PD arrays, right? Like you're saying, Chris. Now, so we have an inversion here. Here's a breaker. Here's an inversion. Here's a swing point. So yeah, like this. So what about this one, Chris? Like here's a swing low, and this one's been rated, but it's not significant, right? Minor, and still technically minor, but you have an insignificant low rated and that low rated. For sure, this fair value gap, like it can raid this low, and I can still be on sides. This high has been taken. But I'm going, so conservatively here with this 1.3 trade that it should just distribute if it's going to distribute. So here, well, if I'm understanding what you're saying, I guess that is because that's a new high, right? Swing low is rated. Here's a new high. That's a break of structure. So this 5-minute fair value gap is failing. Far 1 minute 30 seconds to closing above. See if it does it. It took this high. It could be a stop hunt. I'd like to see price push up into 2222, 222. The daily low right there at 205. Interesting. Right? Previous day low right there. Yeah, anything can happen, right? Oh, for sure. Like so many times I've seen it do this kind of thing. It raids this high, right? Raids this high, comes down, raids this low, and then rips. Because this could be a consolidation before distribution again, which is more than likely. But yeah. So I gotta detail out these. I guess that's interesting. Like these. Sorry, all kinds of messages. You know, these little details, like you can't make your rules so overwhelming that they're hard to follow. I've had those kind of rules too, and I loosened them up, but then it's like I get these variables like when do I trail my stop or not? Is prices moving? And it just becomes too complicated. Yeah, I love that you're about the data, man. You're like me in crypto physio, right? Data nerds. I just don't have that granular of of data. I guess maybe that's me not being disciplined enough to document every single aspect. But like, yeah. So there is that level 2222. That is the consequent encroachment of the fair value gap. 15. The volume imbalance on the 4 is right above. So is my target a little high? Maybe. But I wouldn't mind breaking even on this one on the day. Don't like the tailless candle down there. Pushing up, up. Need a little more. Come on, girl. Good guy. Thank you. hold on. Breakfast delivery. This is like where I start to get a little impatient. I'm like seeing this tailless candle down here. It's so close. Part of me wants to not accept minus $11 for the day. Just something psychologically about that. I want to hold off to get the positive $2 or whatever it might. And even then, after the contract fees and all that, it'll probably be a negative number. Here's this fair value gap. Don't want to see it come below that, preferably. Ooh, look at that. I'm gonna do one of two things. That to me says it's coming or it's going. So I'll zoom down. I'm kind of feeling like it's coming, so maybe I'll just close it, take what I can get. Tailless candles up above. That's a solid rejection block. I don't want to see it come below consequent encroachment of that, so that sweep down here, targets up above. Yeah, you don't fight it over a few ticks. I was just about to do that, and then it just went boom. That's okay. So for me, this rejection block's important. I want to see this get inverted. Maybe I shouldn't even be on the 15-second. Zoom out a little bit. Yeah, I don't. I think that's all she wants to give, potentially. Unless this candle starts moving. That would create a nice little order block if it went closed above there, but doesn't look like it wants to. Getting close to calling it. So a consolidation, tailless candle. Coming up into this 15-second fair value gap. So that took that low. So shouldn't come below 50% of this this wick here. Shouldn't come below that fair value gap. It could just be consolidating. So I'm gonna just kind of tighten this up until one or the other happens. Either it rails through this fair value gap, or it doesn't, like it might. I'm not expecting price to come anywhere down in here in the next little bit. It either hits my sell limit or my sell stop. Cool. Balancing out this inefficiency, creating an inefficiency rather, probably. Expecting that to be there. Chris doesn't fight it. He goes with the flow. That really is true. Like I think you know that Justin Weirland post where he talks about strength and submission in trading and how it relates to God, right? And just not forcing our will onto the markets and following the will of the markets versus just like forcing our will onto God's plan for us. I'm going to assume this high is going to get taken, and then I'm just going to trail this up a little bit. It didn't close above that gap. Okay, well, maybe that's different then. Anyway, I'm splitting hairs here. That candle did close above. High was taken right there. So internal to external. Just waiting to see if we get one more push up. I have stop tucked pretty close, but I pushed my target up a little bit. Gap was my original target. And what we see. So it did create an inversion or a fair value gap. So for me, if it doesn't invert that, I'll just close it. All right, so that candle's inverting that. 15-second, did leave a tailless candle down there. My eye, it shouldn't come down any further than this. Next couple minutes. Forming a what are we, the 45 after, so 10:45, 10:46 New York time. So outside of macro, and with that rejection there, that to me feels significant. I want to see where that candle closes. So that candle is going to close pretty bearishly. So 2 seconds. So yeah, I'm out. Done. Take that stop. Boom. All right. Now, oh thanks, dude. I didn't break even, so that was the W, right? It's gonna stop those equal lows, and it's tapped into this fair value gap. Let's see. Yeah, down. I'm almost back to break even. That's cool. I didn't have much more expectations out of that, so that was I guess that's the line to toe, right? In that case, it was like it was kind of meeting my expectations. So that was the reasonable place to get out of the trade. I don't expect it. Like, what are the chances it's going to come all the way up into here through that new week opening gap it already stepped? So this 1 hour candle closes in 12 minutes. What else do we got here? So that 5 minute gap inverted. Here's another fair value gap. I got a feeling wondering. Look at that response. Daily here. That's a nice rejection from the fair value gap. Yo, dude, thanks for hanging out, man. Enjoy your breakfast, enjoy your time with your family, and man, I hope you have a wonderful day, and I appreciate you stopping by and keeping me company. Yesterday, Timmy was here just chatting with me all day long, and today it's you, so it's cool. It's cool to have somebody to chat with while you're just sitting here. Anyways, brother, take care, and I'll see you on someplace, Twitter, Discord, somewhere. I have breakfast too. I should eat it. Maybe that's a sign I should go eat breakfast because I don't think it's gonna do. I think it's gonna just sit here and consolidate for a while. I'm probably gonna end the stream anyways, brother. All right, so I do think that the market did what I expected it to. I'm kind of thinking about the day. Well, let me rephrase that. It didn't do what I expected it to do, but here on the 1 hour, I was expecting some kind of like tap up into this area before a retracement. So there was a bearish 930 delivery. I did get that. What I got wrong was this the bullishness in the AM session. Instead, it was a bearish delivery. And there was the short present here, and I couldn't bring myself to pull the trigger. It was just this big old wide breaker. So I didn't take that short. That was probably the trade to take. 930 keeps doing that kind of delivery. And then from there, I had sat on my hands, which, you know, it's a good thing to be able to do. Sat on my hands through all of this. I took a long down in here once price tapped into the daily fair value gap. And clean this up here a little bit. And looking at this, you know, this is often what can happen is I didn't get a strong closure. And maybe that should have been my signal to wait on this. But that often the start of a market maker sell model is this right here, a stop hunt of a stop hunt. So this candlestick stop hunted a higher time frame swing point, and then this candle stop hunted that candle, and then that begins the market maker sell program. Maybe that could have been the clue. I anticipated this 10 a.m. candle properly, so the 1 hour stop, this 10 a.m. stop hunted the 9 a.m. candle low, and I mitigated most of this this loss right here. I feel like there must have been some slippage on that or something, because it was a little more of a loss than I thought I mapped out. Took this long here to right into this zone. My target was this fair value gap. I was trying to get it to this candle high here and didn't quite make it there. Exited on this candle, which looks like in terms of managing the trade was about as good as it could have gotten. I feel like today was a win because I'm working on focusing on not breaking even on the trades. And so that felt like a win. 2 trades and I didn't go break even until my rule was 75% of TP was achieved, which is a little different if you're in it for one contract, obviously, because it's like you have one TP. And I don't want too many rules that it's like hard to manage my rules. Like, oh, if I have 3 contracts, it's, you know, TP and then move stop loss to break even. So I have to think about that a little bit more. But I'm happy. I'm content. This was a good, you know, for being, I mean, being off sides is part of it. So I was off sides for, well, I wasn't even off sides. I just got stopped out. I got in a little early. I was in the macro. Everything lined up. Probably the big thing being a lack of significant closure above this inversion. That was probably my clue. But it also just happens, right? Like, can't always get it right. So stopped out there and then mitigated my loss on this long. That's super interesting. Like, I'm curious. I want to look at this. So like I took, I'm just totally curious here because like I took a long at 23.67. 167. So I marketed in right there, which even that doesn't make sense. Oh, it did it. This candle closed, so I marketed on that. So then this one is 23.105. Uh, 105.25, 105. That's interesting because that wasn't where my stop was. So one contract, that was 125. So that's why, yeah, that's interesting. That was slippage for me. Interesting. So that stop was right there, and I got slipped for another 25 bucks on that trade. Doesn't happen so much on your take profits though, but it does happen on your stops. Oh, look at that. So beautiful. So that high was taken, internal range, external range. So this still on the table, possibly. Anyway, so that's the review of day 12 of the challenge. I'm okay with roughly break-even day. My goal for the first month is just to have the account on break-even. Super conservative, easy goal, I think. And I think it's more about just showing up and doing it no matter what. And I feel okay about all that. So yeah, I don't think I'm going to trade anymore for the moment. I'm feeling a little bit like this could just kind of grind upwards after this distribution lower. So I don't think that there's any more expectations I have of the market today, at least not at the moment. And so yeah, I'll call the AM session a break-even session. I'll be cool with that, and I'll just show up again tomorrow like I do every day. All right.